Hey there, I'm Toni Taylor with Interconnect Mortgage, and I wanted to talk to you guys today about the disadvantages of a VA mortgage. There are a lot of agents out there and home sellers that actually feel like a buyer coming in with a VA loan is going to result in more cost on their end of the transaction, as well as a more tedious, more difficult process to get through. So that disadvantage of their perception could create a problem for you when you're out there negotiating on contracts. But now I want to share with you all of the positives of the VA, and I hope some sellers and I hope some realtors that are listening to this are going to learn some things to help you really make sure that the veterans get a fair crack at their offers being presented, because at the end of the day, there really is no disadvantage for a seller taking a VA mortgage from your prospective buyer, your buyer taking a VA mortgage. So one of the things to touch base on is that your VA buyers can get in with no down payment. So now all of a sudden, compared to somebody that maybe is scraping together 20% of the purchase price, a VA buyer can get in with a lot less cash, which means you can appeal to a lot of people, right? You also have more forgiveness with regards to the debt ratio in a VA deal, as long as there's some compensating factors. And one of the things the VA underwriting does is it actually looks at what are your total expenses versus your total income. And you have people out there that have a nice healthy income, and if you looked at their normal ratios, it may not work, but when you look at their disposable income after all their bills are paid in the new mortgage, they have more than sufficient income, then those deals are going to squeak through and get qualified. Also, VA is actually more forgiving from a credit standpoint than any other program out there before you get into the non-traditional, non-QM stuff. So your VA buyers, when you go through underwriting, are actually going to be put through a less rigorous requirement than what a conventional or an FHA buyer would be required to meet the standard of. Another variable is, there's this conception that a seller is going to have to absorb a bunch of cost that they wouldn't have to absorb on a traditional transaction, and that's just not true either. There had years ago, there were a lot of things that applied to that. That's just not the case anymore. So there's nothing else that gets pushed over to the seller side of the transaction that, that on a normal deal, the buyer couldn't be paying for. One of the things that I love about the VA loan is the 100% financing, obviously, the credit forgiveness, all really good things. And obviously we want to take care of those people that have served our country. Now, if you are a veteran and you have unfortunately suffered some military related disabilities, you actually can also be exempt from those funding fees. The only other downside that I would tell you is, as a veteran, you can't use it to buy a vacation home and you can't use it to buy an investment property. These are intended for owner-occupied homes, period. But another positive is when you are a veteran and you get a VA mortgage, if you went to sell your home, and let's say that, you secured a mortgage and then, 5 years later you go to sell the house and the mortgage rates are higher, you actually could advertise the sale of your home with an assumable mortgage. And a non-veteran can qualify to assume that mortgage. So there are a lot of really positive things that, come along with the VA loans. One other thing to just touch base on is that there's, again, I think it's a misconception, is that people think that the VA appraisals are more rigid and have a higher standard. The VA appraisers that are certified to do VA appraisals are actually, they've been vetted very heavily, and they are urged to serve our veterans. So they actually, there's basically a clause, they call it tidewater, that if they're in the process of evaluating the value of the property and they don't think that they're going to hit the sales price, instead of just issuing the report, they will actually reach out to the parties involved in the transaction, the agents on both sides, and give them 48 hours to supply market information with regards to other comps that may actually support the transaction. So if you're a seller, you've got a situation where right from the very beginning, that appraiser is working really hard to try to make this deal work for all parties involved. So really, are there some downsides to getting a VA loan? I guess from perspective, maybe some people would say there were, but I don't think there is. When you're selling your home, I've had sellers that get concerned about, well, they're doing 100% financing. What if they don't qualify? Well, what if your client's doing 80% financing on a conventional loan and they don't qualify for the 80% mortgage? It doesn't matter. They're going to get whatever they have on earnest deposit back. So even if you're a veteran, put $1,000 on deposit, he's protected by a finance contingency. If you're a conventional buyer, put $20,000 on deposit, he's protected by the finance contingency. So there's really no risk for you getting a veteran a loan. We love veterans over here at Interconnect. I have made my entire team get VA certified. I want to make sure that we serve you at the highest level. We understand the rules. God forbid you're a widow of a veteran. There is actually the ability for you to utilize that benefit as well. So, if you have any questions, by all means, reach out to us at Interconnect Mortgage. If you like this information, you think it would help somebody, please like and subscribe on the YouTube channel so you can be alerted of other information that comes out when it becomes available, and share this content with other people that you think might find this information helpful. We're here to help. Again, if you have any questions, it's always a free consult. 561-373-0371. We'll talk to you soon. Thanks.